Hey guys, Merry Christmas. I just wanted to thank you all for those who've been following my channel. I really appreciate all that you've done, especially supporting this channel. All I see is W, where we gain on positive proceeds and lead with an altruistic mindset. I hope you all have a wonderful Merry Christmas and Happy Holidays. In today's video, I'd like to dive deep and just share with you my overall assessment on three Bitcoin miner stocks that I have the potential to make huge potential gains in the new year of 2025, especially with Trump's inauguration happening on January 20th. There's going to be lots of great bullish sentiments, especially with Bitcoin price starting its Bitcoin rally. I don't think the Bitcoin rally is going to end yet. I think that there's demand potential for it to get beyond the $150,000 Bitcoin range. In fact, even more energy to get beyond that price range. So there you have it. So let's begin, guys. First stock I wanted to cover is CleanSpark. Just to go through updates that CleanSpark announced about 2 days ago, where they exceeded their 24 year-end guidance of 37 exahash and accelerates into their 2025 bolstered strategy of getting their exahash to 50 exahash expected to be complete by first half of 2025. That just shows they're taking on that approach similar to what Iron is doing to really speed up their operations, get their hash rate energized, deployed, increase their miner fleet efficiency, and to mine at a low efficiency rate here. So we've seen significant improvement with their fleet efficiency as well. I mean, at the end of November 30th, it was at 19 joules per terahash. Now it's gone down to 17.7 joules of terahash. That is like one of the industry leading standards here where they've reached that 17.7 and expected to continue to improve as the company continues its strategic growth plan. So they're right behind Iron in terms of the joules per terahash, but I think that this is like one of the leading industry standard, especially because they use the latest and greatest technology, the S21 Pro miners emerging technology. So most of you are wondering, why is the overall stock price just dropping? I mean, just in the whole entire year of 2024, we saw CleanSpark going from like single digits all the way up to like $24 in like February, March timeframe. But just with Q2, Q3, Q4 of this year, we've seen just that descending resistance in the share price. However, I think that because CleanSpark has current portfolio data centers all around different states like Georgia, Wyoming, Tennessee, Mississippi, and New York, I think that's really going to allow for them to shine as a pure miner play and really increase their mining throughput. With the last month's data, they mined about 622 Bitcoins, but I think that by energizing the hash rate up to about 37 exahash, they can well get above like 25 Bitcoins mined per day, which can be like in the mid 650 or 700 Bitcoins. So the fact that CleanSpark is the number two in terms of mining capacity, producing the fastest amount of Bitcoin per month, as well as being the number four hodler with Bitcoins close to about 10,000 Bitcoins on their balance sheet. That shows the huge testament with what CleanSpark is doing. And I think that there's going to be lots of great opportunity here, especially with their Q4 financial results with the rise in Bitcoin price. So I think that there's going to be that shift in demand focus where people are going to be very attracted to CleanSpark in the upcoming days and weeks and months to come. Let's take a look at just an article here where on Business Insider, CleanSpark, they actually received a buy from H.C. Wainwright here, and one of the analysts from this institution reiterated a buy rating on CleanSpark and set the price target of $27. That was yesterday's announcement when the share price closed at $10.26. That just shows you that that's like a 1.5 5 to 2x gain potential overall with CleanSpark in the near term. I think that this shows the huge sentiment in terms of CleanSpark being extremely undervalued, implying that 133% upside from the current levels. Overall, another institution maintained a buy rating of like $22. So these two analysts from these different institutions are considering CleanSpark undervalued, and we'll take a look at what institutions are doing at a later point when we look at the other companies, and it'll also reflect what institutions are doing with CleanSpark. So there you have it. That's my assessment with CleanSpark. I could easily see heading in January, we can see that pop easily back into the $20 range very soon here. Next company I wanted to share with you is Riot Platforms, ticker RIOT. So there's been lots of news going on with Riot Platforms, especially with the announcement of Starboard taking a big investment position in the company. And I think the fact that now Starboard is on board, that's really going to shift the demand focus, really have an influence on the overall strategic plan in the new year as well as many years to come within the model that Riot Platforms has to really unlock their billion-dollar potential growth. So in this article, we'll talk more about just what the vision Starboard sees. So Starboard is an activist investor and indicates that Rye can make way more money by leasing its facilities to big tech companies. These companies are really looking for hidden gem facilities such as Amazon, Google, Microsoft. And, I think one of the reality things is that, through the lens of investors like Starboard considers the expenditures on executive compensation and just quarter over quarter monthly expenditures being at a high price that can change. So just limiting the amount of liabilities within the business model that will help with the paradigm shift to focus right into a lean company to operate at high efficiency and minimizing costs. And Riot has over 600 megawatt of unused capacity that could bring in 600 million a year if used for hyperscaler demand instead of just being a pure Bitcoin mining play. So that really shifts the focus in that Bitcoin mining Riot Platforms might be sitting on a gold mine, one it hasn't fully tapped into yet, which is why Starboard, one of the most aggressive activist investors in the US stock market, has taken a huge position in this company. And what they see is that Riot could really transform itself by moving focus to hyperscaler demand, especially now that we're seeing an increased demand in AI, HPC, as well as Bitcoin. So I think here's a big opportunity, and having the backing from Starboard who does quite well in the average returns with their overall structure. I think this really speaks to the sentiment of Riot's ability to really accelerate in 2025 and onward. They have different mining facilities across Texas and Kentucky, as well as an electrical engineering division out of Denver. Just with Riot's HODL approach, acquiring more Bitcoin on their balance sheet, now having close to about 18,000 Bitcoins, that just speaks to their conviction that they believe Bitcoin is here to stay. At one point in the future, it will bypass that $1 million. And, just with Corsicana, that infrastructure hasn't really been tapped into yet with that overall 1 gigawatt capacity. They've only energized about 400 megawatts from that facility. They're still in construction, and that construction may be positioned to structure itself for HPC AI platforms, especially with their site being close to the Dallas site or just more of the suburb areas that have a high demand for AI technology. So current price at like $11, I definitely do think this is a extremely undervalued company with that potential for a 3 to 5x gain potential in the new year of 2025. So the fact that Riot's performance in terms of stock price has really underperformed in 2024, similar to like CleanSpark and Mara. I think that RIOT is one of the HODL high producing Bitcoin mining company that has the potential to really break out on top of this speculation that they may consider tapping into a new business model into the AI platform. So definitely, I do think that RIOT has that potential with the backing from Starboard, given that they think hyperscalers will be a potential $1 trillion opportunity just with cloud computing, just Amazon Web Services, Microsoft Azure, Google Cloud, who run massive data centers to support AI and high com performance computing. So I think just with the infrastructure that RIOT has, it's very difficult to acquire and obtain facilities with high energy capacity. And with Texas site as the largest Bitcoin mining facility, that really just speaks to the hidden gem that is found within RIOT. Similar to what we see with Core Scientific, where they had a deal with CoreWeave, an AI data center startup backed by NVIDIA. With that deal, I mean, there's anticipation of $8.7 billion over 12 years and delivers 75 to 80% margins, far better than the margins in Bitcoin mining. So I think that overall, with this strategy here, if or when RIOT taps into that space, that will really allow for them to increase their revenue, and that could just bring in 600 million annually, nearly doubling its 313 revenue with leasing the unused 600 megawatt at the Corsicana facility. We know that Core Scientific, the stock soared 40% after announcing that day and is up 220% this year. So I think that RIOT can definitely lean towards that direction and really capitalize on the hyperscaler revenue to fund Bitcoin purchases, creating that cash flow from AI-based service, and then using the cash flow as asset accumulation to buy more Bitcoin as a strategic dual threat strategy. So there you have it with the RIOT platform. So I wanted to just also cover Mara. We've heard about Mara being the number one Bitcoin mining company, and that really explains why their overall share price is much higher than what we've seen with like CleanSpark and RIOT. However, current price hovering at like $20. I do think that the fact that it's hovering at $20 and it's tested like $35 $30 in like November. I definitely think that Mara is extremely undervalued right now and has that potential for an easy bounce back to test the $30 resistance heading into like January in 2025, especially with the rise in the continuous Bitcoin cycle price. Overall, the downward resistance that we've seen over the weeks, I definitely think that it's extremely undervalued. And HC Hain right here restated a buy rating and set target price of $28, which was on December 4th. So there, there's the testament of showing how much conviction, institutions have with Mara. So I definitely do think that Mara is a safe play. You may not necessarily get like that big bullish run like what we've seen with like Hut 8, BitDeer, just with the year 2024. But I do think that there is that ability for Mara to really run up. And there's just been, speculation as to whether MSTR will buy out, Marathon Digitals by increasing their shares. What if MSTR and Mara partner up? The fact that Adam Thiel is like working very closely with Michael Saylor. So we don't know what the dynamics will be, but just looking at it through the lens of come January 20th, when Donald Trump is inaugurated, he's going to announce the U.S. Strategic Bitcoin Reserve Initiative and map out that plan. And for those reasons, I think, the top titans of the Bitcoin community like MSTR and Mara will gain on that regard because they have a HODL count that is way more than what we've seen across different companies, similar to like what Mara has. I mean, close to about 44,000 Bitcoins on their treasury reserve right now, and that can really back and support the government strategic reserve strategy heading into 2025. So I think that Mara has that 3 to 5x potential as well, and there's going to be some huge upsides that we'll see heading in the new year here. I wanted to just share with you some visuals from X here, just with what we're seeing with institution buy-ins here. So we know that about 66% of institutions have been acquiring Mara, or they own Mara. So they own about 66% of the company. You see here in December, they're just pumping more shares, buying more shares as if it's Bitcoin here, just in the year 2024. So that's ramping up. And I think that overall, that's really going to speak to the reverse patterns that we'll see in 2025. Also, just looking at Mara here, we also see that consistent increase with institutional ownership here from just December timeframe, that huge ramp up with institutional ownership with RIOT. So I think that over the course of the years here, the fact that it increases, that shows the conviction of the continuous growth and increase in the market cap of these miner companies. Taking a look at CleanSpark, so we see this huge bounce up as well with the rise in institutional ownership. But why do we see the share price at current state $10? I think that with H.C. Hainwright's price target of it getting to $24, we're going to see that coming very soon. So there you have it, folks. I hope that you found this video valuable on my deep dive analysis of these three Bitcoin miner stocks and its potential to break out in the year 2025 with the Bitcoin rally just beginning. And I just wanted to say Merry Christmas. Thanks for stopping by. And please make sure, if you're new, to like and subscribe to All I See Is W. Thank you.